Welcome to Beyond the Guidelines, the podcast that takes you past the listings, the programs, and all the polished sales talk to reveal the real people shaping today's real estate world. Here we uncover the personal stories, struggles, and wins that define each guest, giving you a fresh, human perspective on the business. At Creative First Mortgage, we're on a mission to help you see the person behind the professional, because real estate isn't just about the deals, it's about connection.
So today's guest is someone we're excited to introduce to you, not just for what they've accomplished in the market, but for the drive, values, and vision behind their success. We're here to go deeper beyond the standard industry sound bites and explore what makes them tick both on and off the field. So before we talk about your business, I want to start with something simple but powerful. First of all, Ron McCalman, welcome to the show, man.
Thanks, Jason. Long time no see.
Yeah, it's been a
How's
while.
everything going?
I'm doing good, man. All right. So before I get started, man, if you do me a favor, tell the audience a little bit about yourself and who you are when you don't have your professional hat on.
Father, husband, have a son, just starting the college year, starting in August, and getting ready for that, and just living the life, just like everybody else out there, just grinding down and playing hard and try to stay safe.
I hear that. All right. So Ron McCalman is in the insurance business. So we've shifted a little bit from the real estate and broker audience because insurance is very important when it comes to mortgages. Ron is a consummate professional. How long have you been in the insurance business?
About 16 years.
Okay. And so what made you, I guess, get into that business?
Honestly, I was looking for something in the finance world and had an opportunity to go meet with several insurance brokers and decided to move towards that path. At first, I went with a captive company, and that's where they basically only sell like one product, their own company's product, like an Alpha, State Farm, AAA, companies like that.
Okay.
Then moved over to the brokerage or the independent brokerage side about 3 years ago, so we could open up, more companies that would compete against each other, and the customers would have an opportunity to choose from different companies that would meet their needs and their premium amount.
Gotcha. So you're talking about independent versus captive. So when you say captive agent, you're talking about the big brands, right? Like the
State Farm. Yeah, like the State Farms, the Alpha. They only have the basic one product. You're going to have State Farm, or you're going to have Alpha, or you're going to have name the company, USAA. Those will not shop around. They're going to give you one target quote from that company, and they cannot move you around like we can. We have over 25 different companies that we can move you around. If your rate goes up one year over another one, we can start shopping into those companies and find you a better rate.
Yeah, so it's probably similar to our model, right? As an independent broker myself, we don't have just a regions. And so if you don't fit in that box, or if you're a little outside of what they're looking for, you can't really fit in. So
Exactly.
This is a way to save clients money, not only on the beginning, but when renewal time comes, you're not just stuck with, hey, what does Alpha have or what does State Farm has? You can look around and find the best product every time.
Exactly. We through the process, and we know when somebody's renewals coming up, we get notifications. So if we can shop through that, and if you still, insurance premiums are changing month to month. But if you're still happy with that company and the price is good, we'll just leave you alone and it'll just automatically renew. But you do have the options to shop around.
Gotcha. Awesome. So at what point in the mortgage process should a buyer start shopping for insurance, would you say?
I would say at the very beginning, because you really want to narrow down what your monthly mortgage payment is going to be. And insurance can affect that from $100 a month to $600 a month difference. So you really need to, people shopping around, they find one or two homes that they really like, call me, and we can, it doesn't matter how many homes we quote. It's not going to affect your credit or affect us at all. We can quote as many homes as you're looking at, just so you can, when you go back to your mortgage company, you can say, hey, this is my premium, and they can tell you exactly what your monthly plan payment's going to be. So I would do it at the very beginning when you start shopping.
Yeah, I agree, because, we go off of our debt to income ratio. So that's a huge difference, 100 to 600. That's a massive increase in premium. So I guess my question to you is, so like, what are some of the factors that affect your premiums? In other words, like, what determines how much you have to pay yearly?
But insurance companies they have hundreds of different models that they use to come up with a premium. Just like you guys, y'all do a credit check. Insurance companies do a insurance score check, which is just it doesn't affect hard credit ratings. It doesn't check your credit. It basically looks into, like, if you pay your bills on time, if you your insurance history, have you had any claims? The biggest thing that we're seeing right now too is zip codes do matter. Insurance companies will look into that zip code area and see how many deaths have been reported, how many fires have been reported, how many weather claims have been reported in that zip code, and they will adjust their premium rates within that zip code area. So obviously it's getting a little tougher out there because of the weather we've had here in the last couple of months. But I'm hearing probably in about the next 10 to 12 months, 13 months, rates should be coming down on the insurance side on homeowners. A lot of companies are also looking at tree coverage, which they will take aerial sites and look at the top of your house and determine the percentage of tree coverage over your house. They will also surcharge you on that as well. So it's getting a little crazy out there, but there's still some good deals to make with some great companies.
Yeah. So kind of expanding on that idea, I know that, zip codes matter. However, on a national scale, when we have, fires in California or flooding in Texas and those like terrible, atrocities that no one can really control, but it does affect, what's going on nationally to the local scene, does it not?
Oh, yeah, definitely so. And it's the flooding will on a small scale, because you're going to have flood insurance to cover that. And national companies will not, they don't offer flood insurance. I mean, we have flood companies that we can write flood insurance through. But the weather claims out there, and obviously, the cost of material, labor costs, all of that rises as for insurance premiums. So everything's combined into that, and your rates are going to go up.
Yeah. So like the increase of inflation, for example, that definitely directly affects insurance like everybody else.
Exactly, because of the building material costs, lumber costs, nails costs, labor costs, and I think they're actually seeing a shortage of labor out there, so they're having to pay more to get people out on the job. So it varies. I've seen here in Alabama, and it really determines on locations too, but probably building costs, I would say anywhere between $175 to $250 a square foot.
Yeah. And so if you wanted to try to save your customers money, I know that some of the, big companies are always advertising like the home and auto discount and the bundlings and things like that. Are there any discounts that you can offer that buyers should know about when doing a quote with you?
Yeah, we have obviously companies love bundling because every company wants your auto insurance and not your home. But bundling does save you between 10 to 15% on auto and home. But we do have And everybody's different. Everybody's not in the same box. So you're going to have, everybody is going to be different, and each quote's going to be different. But we do have companies that only write home insurance. That way we can, bundling is good, but if it's still high, we do have those companies that only offer home insurance. And then we can go and shop your auto insurance and save you money that way too. We've been doing that quite a bit now, with not necessarily bundling, but you will get a break if you have your auto with our agency through these home quotes or these home policies that only have home, that don't insure homes.
Right. And so I know cost is important for everyone, but cost isn't the most important thing. I know we talked a lot about, making sure you have the right coverage. And when someone's looking at your quote, for example, and from another company, and they say, well, this company's cheaper, but they don't have the, maybe the proper insurance or maybe enough coverage, how important is it for you to go over not only the cost of the premium, but also, the amount of coverage that they have for whether it be a house, automobile, motorcycle, whatever?
Yeah, I mean, coverage is huge. Because obviously you don't want anything to come out of your pocket if you have a total loss on your house. And I know several people during the tornadoes, what was it, back in 2011, I think it was, that came through Tuscaloosa and Birmingham.
Yeah.
There was a lot of people uninsured, and they couldn't get the same cabinets or the same flooring. They had to lower their cost to get, the less expensive cabinets and floorings because they couldn't pay it out of their own pocket. I saw a study, I don't know, a couple months ago, where it said 80% of Americans are underinsured on their home insurance. And the mortgage company is only going to want how much the coverage, how much you're borrowing. So if you're buying a $400,000 house and you're only borrowing $200,000, they only want to see that it's covered for $200,000 because they're only worried about what they're invested in. But you need to make sure you're proactive on your side to make sure that your replacement cost is enough to replace it if you have a total loss and nothing comes out of your pocket.
Gotcha. Yeah, good info, man. So I work, and let's kind of shift over to like the first-time home buyer model, because as you know, we do a lot of first-time home buyers. I'm passionate about helping people get into homes for the first time. Do you have any tips for first-time home buyers that are navigating insurance for the very first time?
Yeah, first-time home, and this is for everybody. Credit is key on life in general. If you have great credit, you're going to find life a lot easier going through the home process or borrowing for anything. You're going to find it a lot easier. First-time home buyers I love because they're green to the home owner's process, and just walking through the different coverages that a home insurance policy offers. A lot of agents that I know, they're just looking at bottom premium. They're not walking down the steps of all your coverages, and you need to make sure that you understand what each coverage does and how it affects you if something does happen.
Gotcha. And then when something does happen, and they do have to file a claim, or maybe they're kind of on the fence of whether or not they want to have a claim, because I know once you do file a claim, premiums unfortunately go up, right?
Yeah,
So they become a higher risk, client. So what is your take on explaining to clients once they come up with, let's say there's a roof leak or something happened in their house, like at what point do you start talking about, well, you could file a claim, but for, based on your deductible and based on how much it's going to cost, like how do those conversations go to try to help them navigate through the claims process?
Man, that's huge, because everybody that comes through our office, I tell them if something happens, do not file a claim. Obviously, if you have a total loss, a tornado comes through or a fire or anything, something like that, obviously you're going to file a claim because, it's a total loss. But if you have a roof leak, if you have water damage from a pipe, if you have a small little fire, do not call your broker, call your agent, have them send their guys out to give you an estimate on the repair costs first. Never file a claim first, because that claim is going, or never call the company and say, hey, I'm thinking about filing a claim. This happened. Most companies are automatically going to file a claim. Do not go to your agent or go to your broker and have them give you their guys to go out there, give you an estimate on the repair cost. And obviously, if it's lower than your deductible, you're going to handle it. If it's a little higher, I would probably handle it myself as well, so the claim will stay off of your insurance. Because once a claim is filed, it's not going to come off, and they're going to look at it for 3 years. And it's probably going to raise your rate about 20-25%.
Okay. So does it really just depend on the amount of deductible versus the damage that happens to the house to really figure out, hey, like this is something we may need to do, or like, wait a minute, like your deductible is $1,500. The cost of it is, maybe $5,000 to fix.
Yeah.
Is there like a ratio that you would maybe recommend for someone to say, let's do it ourselves versus let's file a claim?
Yeah. Everybody's different. Some people have, say the rainy day savings in their bank account or emergency fund, and some people don't. So, if you can afford, if I have $1,000 deductible and it's going to cost me $1,500 to fix it, I think I'd rather come up with an extra $500 to have it fixed instead of filing a claim in the long run, because it's going to follow you for 3 years. Especially if it's a water claim. Companies now are so skittish, homeowner companies. A lot of companies will deny you coverage after a water claim. Just one water claim, they'll deny you. So you really need to get with your agent, and your agent and broker. They have people that will go out there and give you an estimate on the cost to repair that. And then you guys can make an educated decision on how you want to go about it.
Gotcha. And I know as an independent agent now, you have a plethora of different products that you can offer, not just homeowners and automobiles, right? But you can also do bonds. You could also do commercial. So do those outside the box, like maybe commercial coverages, like maybe workers' comp and things like that, was that also considered as a discount for bundling, or is it just for like your personal assets?
It's not, unfortunately. Yeah, commercial's a different animal. So that's going to be on its own. But investors, if you have landlord property, if you have investment property, you can tag that along onto your other policies, and that will give you another discount. And we have companies that only do landlord policies, and you can stack those landlord policies on each other and get a discount on each property as well. So yeah, there's a lot of different avenues a independent broker can do than a captive agent.
Gotcha. And so when you're quoting homeowners insurance and you find out, and we're neighbors, right? We live in the same neighborhood. We see a lot of golf carts driving around. We see a lot of, utility vehicles that are on the street. When you're talking to people about getting homeowners policies, are you looking at like their overall, assets and determining what else they need? And if you do, are you recommending that they're insuring everything, including like motorcycles, golf carts? Is that something that we need to be looking at?
Oh yeah, and golf carts and motor, especially through our neighborhood, golf carts are huge, and families need to look at if something happens and your teenager or under, not even a teenager yet, is driving your golf cart and it's illegal because you're supposed to have a driver's license to drive a golf cart on the street as well. If they hit somebody or hit something, you're going to get sued. So I hope you have a lot of liability, and I hope you have a big umbrella policy attached to everything that you own, because underage driving in these neighborhoods with golf carts, as soon as something happens, you're going to have all those attorneys that advertise on TV. They're going to be knocking on your door, and they're going to be asking for your liability insurance.
Yeah, it's crazy how we see how many underage kids are driving around in golf carts in our neighborhood.
It's unbelievable, and it's not if it's going to happen, it's when it's going to happen, and then it's just going to open the door. I mean, these guys are just not going to be protected, and they could lose everything that they've worked so hard for.
Sure. All right, Ron. So I know that as an independent agent, you have quite a bit of different, options and products for folks, not just on the personal side, but just let our audience know, what else can you offer folks to help them be protected, whether it be commercial or PNC?
Got anything on personal, your autos, your home, your boats, your motorcycles, any toys that you have, we can cover those. And we find that, especially with toys, 99% of the time, we won't write those with your home and auto companies because they're just not the lowest as far as premium. We have other companies that love toys, but you still have that coverage that you need. Commercial wise, general liability policies. If you own your own business, homeowner, we have general liability policies, workers' comp, bonds, anything on the commercial side. Business owners policies. If you own a business in your home, you need to check with your home insurance to make sure that business is going to be covered. Usually it's only covered up to a certain amount. And then you need a business owner's policy. And we can do that for you. But we can insure anything. We have a company that will do it.
Okay. All right. So there's a lot of talk too about mortgage protection insurance, where they say that you need to have protection on your mortgage in case if something happens to you. Do you offer that? And what is that exactly? What type of insurance is that?
It's really, if you want to do term, it's basically a life insurance policy, where you get a whole life policy or a term life policy. If you have a 20-year mortgage or a 30-year mortgage, is it a good thing to get a term life policy for that amount of time, just in case something happens to you, where you can go ahead and pay off the house, where your family's going to have a paid off house. That's into the life insurance gondra, and we do that as well. That's basically mortgage protection on that end, and it's term life is cheap, so and you can get a 20-year policy for, depending on your health, $500,000 million 20-year term policy for probably, I don't know, $50-$75 a month, something like that.
Yeah, and those are dependent on age, right?
And health factors, they'll look at. Now, some companies will right on the spot with no health checkups. I know a lady. She was 56. She got a $650,000 policy for like $114 a month, and it was for 20 years. So she's going to have that until she's 76. And at 76, do you really need life insurance? You probably don't, because you probably got enough money for your burial expenses. Kids are out of the house. Your assets are probably close to paid off or already paid off. So that's just something that you guys would have to make a determining factor on.
Yeah. So when it comes to life insurance, is it important to try to lock in a good rate when you're younger, as opposed to trying to get it when you're like middle age going into your senior years?
Oh, definitely. The younger you are, and I would suggest getting with a broker myself. The younger you can do it, the better. And the whole life, everybody says against whole life, but whole life does build up a cash value over time. And there's some other term life return of premiums where, excuse me, after a certain amount of time, when the policy ends, they'll return the whole, 100% of the premium back to you. So there are different life insurance policies out there instead of just a term life and just throwing the money out.
Gotcha. Cool, man. Well, yeah, I appreciate you being on the show, Ron. Did we miss anything? Is there anything that we needed to go over, something our audience needs to know, or any potential clients that are thinking about, looking into some coverages, anything that we've kind of missed on the show?
I would the most important thing is if you already have a homeowner's policy or own a home, just look over your coverages and make sure everything that you understand each coverage, how it works, and determine what your rebuild cost will be and make sure that is your replacement cost. Because I've seen too many times people underinsured, they think they had enough. They say, no, I'm fine with this. This is what it's going to cost. Okay, well, let's go with it. And they find that they're underinsured. So just make sure you understand and know what your coverages are.
Yeah. And how often do you think people should check to make sure they have proper coverage? Is it like 6 months? Is it yearly? Is it every couple of years?
Yeah, I would definitely do it yearly because inflation changes drastically every 12 months. Sometimes it's down, sometimes it's up. So I think building costs are going to stay pretty high for the near future. I would imagine.
Yeah. And then the other benefit being a broker as well is because, claims may be higher in certain other companies and maybe their premiums start to go up, whereas other ones become a little bit more aggressive. Exactly. So yeah, I agree that we need to be checking around and making sure that number one, not only do we have the proper coverage, but number two, are we getting a good deal based on the coverage you have? And I think the benefit that you have is you can say, hey, I've got, I don't know how many places that you can write through, but I know you have plenty to go in and say, okay, this is a good company. However, their claims over the last couple of years have skyrocketed their premiums right now. Maybe we need to shift into another company.
Yeah, exactly. No, we have over 20 different companies as far as on the home and auto side that we can shop through. And yeah, everything. You need to update everything, I would say at least every 12 months or just look at everything every 12 months just to make sure that you're still, you feel like you're covered, the premium's still good. It doesn't cost you anything to shop. So you might as well, if you feel like you need to shop.
Yeah. So if someone wanted to make sure that they had the proper coverage and we're getting the best deal, what do they need to send you to make sure that they're in the right spot?
No, just give me a call, 205-516-9931. I just need a little bit of information and we can go from there. We can start shopping and make sure you have the best premium with the best coverages.
Yeah. So they can just send you like a deck page and give you a call and go over it with you?
Exactly. Yep.
Okay, awesome.
And if you're out there, anybody, it doesn't matter who you're with. If you just want to call and go over your current insurance, we can do that too, just to make sure you understand what each coverage is and what your replacement costs are and what effect that's going to have if you do have a total loss.
Gotcha. Well, Ron, I appreciate your time, my man. Thanks for being on our show. We'll have all the information to contact you somewhere below this video. And guys, if you found value, give us a like, give us a follow, and feel free to reach out.
Today's episode of Beyond the Guidelines comes to a close, but the story doesn't end here. If you enjoyed this conversation, make sure to subscribe so you never miss the next one. And if you'd like to share your own story on the show, check out the link in the description to connect with us. Until next time, keep rewriting the rules and remember to go beyond the guidelines.